Okay. Hey there, guys. G'day, Joe. Now, can you see the screen okay? I'm going to have to put. I'm going to have to mute that, aren't I? So I normally have it coming through one computer. G'day, Nathan. Um, but I don't know how with OpenOffice, anyone that uses that, I got the presentation that I'm going to do on OpenOffice, but I can't get it off two screens for some reason. It wants to take up the both screens, and I've got my third one that I don't normally use as much, but I'll have to go through that one as well. G'day, Ben, Gino. How are you guys? Hope you're well. So what I want to do today, just for something different, I think a bit of a change in pace. Not much has changed in the markets. Um, so for this stream, we're going to go through a bit of a presentation I did into the UK, a webinar the early hours of the morning last week. I think it was two. We did one with Davin initially, and then I extended on that, about trading and structure and stuff like that, and risk management and things. Did that on Friday morning, I think it was, 6 a.m. So a bit of a killer for me. I've been sleeping all weekend. Don't normally get up that early. So normally I was up around 5 instead of 6:30. Normally up at 6:30. So yeah, it was tough going. But I'll go through that today because I think it's of interest, and I know that it's good for me. I mean, personally, it's always good for me to keep talking about these things that I'm looking at because it keeps reinforcing it in my own head. So every time that's why I'm happy to do webinars, because it gets you back to thinking about what's important, what you should be looking at. How you view your trading and what the key levels or the key parts of your trading are, so you don't get off track, because you're always going to get off track. It's just a matter of how much you can rein yourself in or when you can rein yourself in. So anyone that's new, welcome. The trade setup, just remember it's general advice only. We don't give any specific advice. Anything we do give or talk about is my own opinions on the markets, and based on my, I guess, experience and what I look for. So I'll get rid of that. So that's the. Let me just see if it comes up okay, because it's going to disappear in a minute. It should. Why is it not working now? Okay. So my other screen disappears. So you should be able to see the full presentation now, I'm guessing. Okay, so that should be the whole page. That's good. I'll just get out of that because I just want to something else quickly. It looks like the US dollar, it's creating a bit of a move lower on a lot of the markets. I was just watching the Hang Seng just before we get started, got sold into a key level. You'll see that what we normally trade, it got pushed down to a key level. So that was the open, smashed down. And that would have been nice trading off that level, but I don't like particularly trading too much before 12:30 when the index actually opens. It's just a bit of that. So the actual futures open at 12:15. 15 minutes later, the underlying index, it's like the SPY in the index, the ASX, it opens 15 minutes later, it starts opening. So taking a punt before that is just that. It's a punt, because they'll chop the market around a lot, just trying to sweep out levels, flush levels, put people on the sidelines and so on. God, I don't know, that is pretty rubbish. Get a lot of stalkers phone calling me about energy for some reason. Doesn't matter what you tell them, they still come back. Yes, the market will chop around. So once the index actually opens, it will start picking a direction, start building a direction. It's a lot easier to see, a bit clearer. Anyway, when they start fighting it out and either bulls or bears win for the day, they're starting to push it up or push it down, or range day. So that's why I don't plan on doing too much before 12:30, unless a prime setup on the one, you can see something happening. But we'll see how it goes. So that's that one. It looks like the US dollar is pressing higher. So just watch the US dollar. So there's two. Obviously, you should be watching it if you're looking at trading and if you're looking at risk parameters. People get these false sense of security. There's a lot of traders that have got it because they've potentially been trading with free money from the US and been pumping it into the US for a while now, but have only just really started trading. So at this moment, getting gains, if you just buy and hold, it's an easy strategy, but that doesn't last forever. And if you're just going to buy and hold, I guarantee you whatever profits you're going to give straight back to the market, because you're getting yourself in some bad habits. So for me, it's always about risk management, where you see risk and how you're going to analyze it and what you're looking at. It's not about the gains so much, because they'll just come. If they're going to come, they're going to come. It's about the risk that you don't see out of the sideline, out of left field, I guess. So at the moment, it's about bonds, inflation, A lot of good news has already been factored into the market in the US. I'm talking about. We're starting to, we've got a level on the index 6660 on the ASX. It's pressured down there Friday, and then bounced off that level. I've had a bit of buying. It's popped in there again today, I think. You can see this little push down. It's bouncing back up at the moment. So we'll keep an eye on that level. To me, longer term, that ASX doesn't look too pretty. I mean, that looks like it's holding a base, but it's breaking out of that rally. So that's a longer term trend up that's been following since the Feb sell-off. We're broken out of that. So does that mean we're going to go into contraction? We're going to either consolidate these highs, which would mean that you're going to consolidate for a long time. I would expect it to be some sort of serious consolidation. Otherwise, we're going to have a bit of a pullback and just clean out some buyers, potentially before we rocket up into new highs. But at the moment, I don't think the trend is up on the ASX at this stage. It's potentially sideways, potentially rolling. It all depends on what the US does, and that's why I'm looking at bonds, the US dollar. So there's two things with the US dollar. There's two trains of thought, and both have equal merit: a rally, or obviously a sell-off, a devaluation of the dollar. So we were talking about this the other day. I think it's just good to recap. So I was reading something else about Ray Dalio, big fund manager in the US, talking about bonds, and it's pretty much what I was saying, but I didn't emphasize as much the selling volume that's on the sidelines. Now, I don't know particularly what the Fed can utilize, but the bond market, what sort of resources they've got to support the market, and that's what they want to do. So basically what's happening, you've got the primary bond market where they sell to raise capital. You sell your bonds, you get investors, it could be other Fed reserves around the world, major funds, all that sort of stuff. They're buying up the paper. Okay, so they're buying the physical paper, and basically giving the US cash. Okay, giving the Fed the cash for interest. Now the interest is next to zero, so that market's drying up. No one's willing to buy anymore. They're all loaded to the hilt, so that's drying up. Then you got the secondary market. So that paper is then on-sold into the secondary market if they don't want to hold it. Okay, with no yield. So why would you be going buying something at next to zero yield, especially the shorter term? So why would you buy anymore? That's what that market is drying up, and they're going potentially into the secondary market. But there's a ton of holders of these bonds that if they think this market's going down, why would you want to hold it? You'd be selling into it. You'd happily give it to the Fed if they're happy to soak it all up. But I don't see how much firepower they can have. I mean, I know it's a Fed US Reserve and they could do whatever they want, but if you can't raise capital, raise funds, or raise debt in the US, they can't raise any more cash to pay off debts, then what are they going to do? So they're sort of stuck, I reckon. And if there's a whole bunch of people that see these yields rising, which they are at the moment, even they look like they're going to push higher, the US dollar can do two. They've got to devalue the US dollar, which makes it worthless holding, which means the US dollar can go down, which makes sense. Or they're going to start raising rates to make it more enticing to people to buy their paper, buy the debt essentially, and give them funds, much needed funds. So if they're going to raise it, then that's probably potentially positive for the US dollar, because we're talking inflation. We're talking the US has a yield advantage over other markets. Okay, so there's sort of that toing and froing, and it's a bit of it really is an each way bet for both up and down. At the moment, I'm sort of banking on up because I think a lot of this bad news, of course, stimulus is there, but stimulus has been factored in. Okay, this 1.9 trillion has already been factored into the market, so it's not going down because of that. It ain't going to go down for much, I would expect. So it just depends how committed this Fed is, and whether they're trying to bluff the market into taking the foot off the pedal with regards to selling or not, because there's literally a bunch of selling on the sidelines. If they want to start getting out, it's like anything, and there's no one to buy apart from the Fed, then how much firepower they are willing to throw at the market. So that's the sort of next thing I want to start to look into a bit more, because I think this could be really, we had some really good news announcement in the US, and it's all been factored into the market, and the market's sort of starting to chop sideways. You can see the NASDAQ, which is, to me, it's starting to roll. There's some pressure. The longer term uptrend is breaking, it's fading. Go to an hourly, get a bit more data there. You see that longer term uptrend, that's since the major correction. That's Feb. Yep, March, Feb. It's been up, or one in action. Well, now we're getting our first sort of serious correction, whether it's something like this, and you've got a trend line that you've been drawing, and then they have a correction sideways, and then we go up for another leg. But we're already into the end of the second leg up, and that's massive. So whether or not this corrects and we go higher, I don't think so. I think this market loaded with debt for growth, if we're talking about rate rises, is a big It's a big problem they've got facing. Dow, yeah, well and truly extended, bit of a blow off potentially. It just depends where it has a bit of a pullback to, and the S&P is just relying on both. So, all right, let's go over here. So I'm gonna I'll have it on 2 screens now, and I have my third one just with, which I don't normally type into, which I've got up and running. So any questions, I'll see them and I'll just talk through. So feel free to ask any questions as we go on this presentation. But I thought as a bit of a change of pace, rather than do the same old thing all the time and talking about the markets and stocks and shares, I don't see a hell of a lot of stocks setting up. We've been short. We just got one long got closed out. We had that for ages, went absolutely nowhere, and it had every reason to. And we had a short on FMG, which is just booked a partial and kept going down. So I'm tossing up whether just to close it out at lower levels because it is stretched to the downside. You know, being FMG, everyone loves to buy it, and if the market wants to go up, it'll probably drag it up with it. But at the moment, seems a bit of heat coming out of that recent rally in Fortescue. So we took advantage of that on the short side. So at the moment, I've seen a couple of shorts. We've got a potential short setup, a long setup. It's a bit each way at the moment. So what I'll talk about is the webinar that I went through. I'll probably skip through a few bits and pieces because, as you probably know, you've seen a lot of it. So I'll talk about some key setups that I use, and which most of you would know, but it's a good just going through it. And at the end, there's a couple of examples. One on the Bitcoin and one on the Seng. So the Seng was the actual trade that I did, but I want to walk through the reasoning and step by step of what the process I was thinking, and potentially what I see and where. I wouldn't say retail, but where traders could have problems. And we'll talk about the key, the top trader traits that actually can hamper success. It's fear of missing out, FOMO, wrong side of market, wrong areas, especially buying and selling in the wrong areas, waiting for too much confirmation, all that sort of good stuff. So that's just a results page. That was a bit of here's the disclaimer. We'll skip over that. We've already sort of run through that with the trade setup with the stream. Now here is what I basically look at with the markets, okay, how I trade and what I look for in the action. What we're trying to do is follow the big boys. It's as simple as that. We aim to follow bigger institutional traders. If you've been following me for a while and just, we've had some chats, they leave a lot of crumbs. They leave a lot of clues or footsteps. So that's hence the picture. We're trying to follow in their footsteps. So we do see there's a lot of setups, there's a lot of washouts in the market, not particularly in shares, but if you're trading anything like indices, currencies, Bitcoin, Bitcoin's a cracker with some pump fakes, we call it, washouts. You've heard me all talk about those before. Markets will do that time and time again because the bigger boys are trying to get liquidity, okay? It's basically supply and demand. So they're trying to get in the right zones and trade around the right zones and build a position, whereas your mums and dads are looking at minor, myself included, looking at minor scale. So what I'm trying to do is anticipate what the bigger moves are, the bigger zones to be into, and trying to trade those accordingly when I get my setups. Okay, so you don't want to wait. In trading, you don't want to wait for too much confirmation. Okay, because once you've got enough confirmation, the move's already on, and whether it's going to continue on or not, you're asking a lot of the market. How I trade and what I look for in the action. If you've been learning for a while, probably skip over this a bit. You've listened to a number of webinars. Everything's got use. Okay, everything. I believe there's some good and bad in everything. There's some rubbish that's out there, obviously, but even there you might pick up a few nuggets that's worth listening to. And all you're trying to do really is learn and make sense of what they're talking about. And if it makes sense to you, then you can implement it in your trading. With me, I know this makes sense to me, and for whatever reason, what I've built up over time, and I've proven that it works. That's what it comes down to. So hopefully it can make sense to you guys. What we're talking about, or what I'm going to talk about. Key tips for trading is obviously your mindset. Losses are part of the game, okay? Don't try to work your way around that. They are part of the game in trading. There's no way around it. To me, trading statistics, we've talked about this before, you're trying to get statistics and probability on the side. So all you're ever trying to do, and that's part of the discipline, is trading in key zones, in key areas, at key times, that gives you a high probability of success. It's not everyone's going to be a winner. You can have the same setup play exactly point for point, exactly the same up to a certain point. You enter, and it's still randomly which way it's going to go. I mean, it's a high probability setup. It doesn't mean that it worked yesterday is going to actually, the same one's going to work today. Okay, so you just got to realize that. And if it doesn't work, don't go looking to change your your strategy in that. You've got to do some work on your strategy, find an edge, and once you've found that edge, you just keep implementing it, and you might refine it. But once it's there, it's there. And I feel like what I'm doing now, in my stage of trading, in my career, is just refining what I'm doing. It's not about, you get those days where you get hammered. The other day, I got hammered on Thursday, not last week, the week before. Got back last week, which is good, but that day was just stupid trading. It was just, you tend to get a bit complacent, and it can happen. So you got to realize that's part of the game. You're gonna have those bigger blowout days. You're gonna have those smaller losses, which you all got to take part of. But consistency in what you're doing is the key. Trading the right areas, which we just mentioned, buying the unknown, not the known. Once you're in the known, is more confirmation. Yeah, it feels better. You feel a bit more comfortable, but trading's not about being comfortable. It's comfortable with being in the zone where it feels uncomfortable. Does that make sense? You're trying to get comfortable with that feeling where you're in the right area. If it's hard, there's a potential reason for that. It's hard because it's going to be paying out, hopefully. Okay, it's got a high probability of success, but you're trading in the unknown for the reason where others are still selling. It's getting soaked up, like we're talking about that trail, trying to follow the instos. That's where they'll be, they're working as well. And we want to try and work in those same areas. Risk management. Now, risk management, we can bang on this to a blue in the face. Risk management is a massive part of trading. Okay, so you've got to, on any trade, any styles. I mean, we're having a discussion in the forum recently about risk and that. I don't care how you trade. You've got to know your risk. You can trade like I do intraday, trade on a daily basis, but every single style of trading I'm using, I know exactly what my risk is before I put it on. And I don't want to change that. Yeah, I have in the past. I've mucked around with my risk and I've got caught out. Sometimes it's worked, but even when it works, I've got to realize I will make a note of that saying that was stupid. Okay, I made some money, but it was still stupid because the day will come if I start getting used to trading like that and changing and start mucking around, oh, it worked last time, it'll work again. I guarantee you it only takes one big blowout to give back a hell of a lot of work. Okay, so you really got to know where your risk is and implement it. There's going to be times when you buy, turn around, stops you out, and it goes on without you. Okay, that's just the nature of it. You're going to have to be prepared to get back in if it reconfirms. Okay, so I really do think that people can get a 50-50 strike rate. Not too hard, but it's the risk management that people find hard because they're going for the bigger gains. It's a business. We're not trading for fun. We're trading for a business. Market supply and demand, simple as that. Supply and demand at different levels, more supply, less demand, goes up or goes down. Okay, and we're trying to trade when one outweighs the other. Now, this is a trader trait that Davin's talked about a lot. Okay, and this is sort of, these sort of things I've gone through with him a lot, we've spoken about, and I'll always listen to it and always like, oh, yep, that's a bit of a heads up. So we tend to wait for too much confirmation. You can see my mouse. We tend to wait for too much confirmation when the market's gone up. And then we start to see, okay, we were right. Look, let's buy it. Okay, it's going to keep going because I've been proven right. It's gone up. But a lot of the times, more often than not, you're buying at the high and you're doing the same on the sell side. You're waiting for too much confirmation and you're selling on the lows. Okay, and you tend to, I mean, that's not all the time. It can keep going. That's great. But the higher it goes when you're looking to buy and you wait for too much confirmation, to me, the bigger the risk you've got to take, the more risk you've got to put in place and the lower the payouts are. Okay, they go from 3-to-1 to 2-to-1 to 1-to-1 and even lower because you're waiting for too much confirmation in the move where a lot of the fuel on the sidelines is already in the market and either buying or selling. Okay, so you tend to do that. You tend to wait for rather than trade in the right zone, you tend to wait for too much confirmation. You're waiting for just you're waiting for it to kick on to prove itself, and then you start jumping in and you're starting to get in with the herd. Well, after the herd's already probably bolted. It could be greed or fear. Greed when you're buying and fear when you're selling. Fear of missing out, fear of being wrong or whatever, and you end up buying the highs, selling the lows, and you repeating to your broke. Okay, if you tick it over the next, that's where we should be looking for opportunity. When we think things are extended or, there's a chance that's rolling, for instance, we see a selling opportunity, not a buying opportunity. And the same on the pullbacks. You're looking for that pullback. You're looking to buy opportunity, not to get out because you've got in late and you're looking to get closed out. Okay. So that's the basic. If you could flip that over and just remember you're trying to trade in the unknown. So the next chart will show you a bit more. This is one Davin's used for years. I've seen it years ago. I'm going to have to tell him to get an updated one. But the two trader traits that most often lead to losses are trading against the predominant trend or against the predominant group, the major price trend. Okay, so essentially what we're trying to do, we're trying to sell here, sell on the pullback, sell in the unknown for continuation. Okay, you start to get the market basing, and we start to get on top of the MAs, then we're looking for the first pullback. We've always mentioned this. So the prime zones are into the pullbacks to the MAs, not the extensions. Okay, you don't really want to chase it. That's buying the highs essentially. Yeah, there's going to be times when it can keep going, but they're very rare. And if you're looking at probability, when you're buying at these sort of zones here and you wait for it to kick on, that's a low probability trade. Yeah, it's going to work 1 out of, I don't know, 1 out of 5 or 6, but the losses are going to well outweigh the gains that you can make on that. Okay, so ideally you're looking to buy those zones where we're bouncing off the MA, or we've had a pullback, and we're looking to expand with the MAs or with the predominant trend. Okay, so the other part's trading after the fact, and obviously don't sell against the predominant trend. Because you're selling against a trend, like I said, you can do it, and I tend to do it a bit intraday, but I'm not looking for big gains. I'm looking to scalp. So it's a different mentality. When I'm trend trading, if you're buying off these zones instead of selling into those zones into a stretch market, there you're looking for bigger payouts. There you're looking for shorter payouts or shorter term scalps more than anything else, because you're against the trend. You're not going for a move right below the MAs. Yeah, it can happen. It can keep going. But again, that's not the style of trading when you're with the trend. Okay, so trading, just gonna make sure I've got the right, I'm not gonna get too involved. Normal distribution. So if you, like I said, if you toss a coin, if you think of trading like tossing a coin, yeah, you can just trade the same sort of setup over and over again. If you're just getting 50-50, you can trade roughly any setup, and you can probably expect over longer term a 50-50 payout. Okay, 50-50 wins resorts, win losses. So it's making sense now. And really, statistically, it should be even. You're going to have the outliers, big gains, and you can have also the outliers, big losses. You cannot get around that. Okay, that's the nature of the beast. That's the nature of statistics as well. There is not any one trading style or strategy that will be consistently. If people spruik 95% of the time, I guarantee you that 5% of the time they're getting poleaxed. And I would never listen to anyone that says, I'm right 95% of the time. It means they're going for 5% gains, so a 5-point gain on a 50-point stop loss. It's the only way to get that, because the market is, like I said, it's going to have those outliers on both sides of the market. So yeah, I can easily get a strike rate of 95%, but it still doesn't mean I'm profitable. I think there's only one way to do that, is to, you stick with the basics, something that you can give you 50-50, and you're always looking to make sure you're managing your risk. And so basically, if you can cut off any of these outliers to the downside, all of a sudden that 50-50, and try to let, this is the hard part also. Like I said, 50-50 is easy. Taking your stops is pretty easy, but also just managing those gains and trying to let them run as much as possible. So my ideal trading style is to get that, but work on this area. It's easy to work on decreasing your massive outlying losses because you just use a stop. Okay, but working on your outlier gains as well is a big thing. So you're trying to manage those trades as much as possible. There's going to be times when you'll see one really go in your favor and then turn around and you get stopped out. Again, that just happens. But you're still always trying to manage that risk. Okay, so the setups we'll just quickly go over. So I wanted to show you the two trades first, and then we'll see if we can get in some talk about the current shares, any shares you might have on that you want to look at. So Pumpfake, I know Nathan's probably going to know this one if he's been around with Davin quite a bit. The Pumpfake is the first one. I term washout a lot, flush, all these sorts of things. That's a setup that on certain markets I look for a lot, and certain reasons you look for it a lot. The shoulder trade, and that's your lower high or higher low. Okay, if you're looking to buy, you want the shoulder off a key level, off a key zone, and you're looking for the higher low. We talk about it a lot in share trading. Basically, you don't need to worry about the lower high, but because everything goes up. But at the moment, you're looking for a shoulder trade, which is basically another term as your lower high or higher low. And that's to sell or buy it with that extra bit of confirmation, but still in that zone where the outcome is well and truly unknown. Okay, the RTF, I think that's another one, Rose. Nathan will probably know. The retest fail with trend. I think, Joe, we've spoken about this. Pete, we've spoken about this before, the retest fail, which is just you could be double top, triple top, but we term it not just your tops or bottoms, but it's a retest fail with trend, which I think is a really prime setup. So if you've seen a trend start, if you go into a pullback and you retest a certain level, around that pullback zone, it should be a buy. It's that minor double bottom that you should be lurking off into the pullback area. But I'll show you some examples. It's probably harder to talk about than it is showing. Pumpfake, number one. So we're looking basically Pumpfake short, Pumpfake long, okay? So we've identified previously a key level, okay? For whatever reason, we've identified that level. The market comes in that level, reacts up and off. Doesn't mean it's going to break at this zone. It does not mean it's going to break below. It doesn't mean it's going to hold. It doesn't mean anything. A test once is nothing really. What you're looking for is that push through, and then straight away, or within that candle or the next candle, it finishes back above and reverse for the shorts. Okay, you're looking for a push into the level, pulls back, goes in there, takes that level out, and comes straight back down below, and then we're looking for the shoulder, or we're looking for an entry after that for whatever reason you want to, whatever entries you use. Okay, so this does a couple of things. You know that there's going to be people who are going to be sitting and buying at that level. You're buying into that level, okay? And if you buy into that level, most likely you've got to stop below. And that pump fake will put you in and straight back out again. Now, if you don't use stops, you can argue, yep, I don't use stops. I don't have to worry about that. It's going to be a time it's just going to keep going. That's not going to be a pump fake. It's going to keep going. And then where are you going to take your risk off? You're going to take a max hit every time? I don't think that's a winning strategy. So it's going to trigger some stop losses. So it's going to potentially, people who bought it there get stopped out, and then if it starts to go, they're also the ones that are going to fear of missing out because they got it right. They just got stopped out. Okay, so they start chasing the market higher. It also creates some fuel and sellers on the breakout potentially. They get stopped in, and their buy exit is going to be above the level. Okay, wherever they put it. So there's more fuel to create that move up. Okay, and one of the key parts I didn't mention, you want to make sure it's a stretched market. It's an extended market. You don't want a market that's gradually coming down, it's trending into a level, and then expect a pump fake. More often than not, you're going to be looking for a stretched market, however you look for that. I'll show you an example in a minute. So you want those trap traders, you want an extended market, and you want it to finish back above the level and start to trap those people, and the ones that got stopped out as that fuel to move that, to trigger the move in your direction, whether it's buy or sell. So example here on Bitcoin. We've identified this level. You can see it's reacted there, flushed through, bounced off there, bounced off again, pushed into it, reacted up and off, went through, retested it from underneath. So you can see this level's been, it's an active level, and it has been for a while. So coming into this pump fake, what we're looking at is this market's pressured down, maybe running out a bit of selling pressure here. We're starting to get buyers lifted up and off, squeeze out these sellers. Okay, buyers are coming in again on this pullback. So you know that there's a bunch of buyers. You've got a higher low here. This is all part of one bigger higher low. Then you've got essentially it's being tested a couple of times. You've got a minor higher low in here. So all that to me is builders building up, pressuring it into a level, and you've got this little run up, a little spike into that zone. Okay, so like I've said before many times, I'm looking at stochastics as a pressure gauge. So that pressure gauge is extended to the upside. So it's running out of buying pressure. To me, when it's extended up, it's in that overbought territory. I don't necessarily want to be a buyer. I'd rather see that somewhere around the mid zone. There's going to be times when it's trending, it can just hover around, like this. It can just hover around overbought. That's fine, but that's a different type of scenario. Okay, and another thing, the key thing I want to see is that momentum coming off. So you can see here when we pushed into that level, momentum was a bit higher, the way I look at it on the MACD, and you can see it's come off a bit, and that next time it pushed into that level, took out that high, flushed it out, finished back below. You can look at the stochastics. It's used all the buying energy I would expect. Once it's finished below, you know that buying energy is potentially used up, and we've got momentum coming off. Okay, so, and that's what leads to that move down. So once we trap a few traders, any one of these buyers is starting to watch it going, oh, look, I could be on the wrong side of the market. I don't want to take a loss, especially the late that are closer to that level. It's been buying it up here or even here. I've just sat through a lot of heat of buying it late in this little move up here and got to stop below. As it starts to creep down, it starts affecting more and more long traders, okay? And it starts to squeeze out more. So if there's no one left to buy it up here because it's stretched, because of whatever, the momentum's easing off, you've got the bigger traders that are starting to build a short position and put the squeeze on these buyers that built up back into this level. And you can see the reverse has happened on the downside here. It's coming to that level there, pump fake, started to lift. It wasn't as quick and hard, it was hard and fast, but here was your trade off a shoulder. You know, that level held, pump fake, trapped some traders, gave them a bit of confidence when it come back in, started to hold a higher level, and up we go. So the shoulder trade. So I want to whip through these quickly. Shoulder trade we've spoken about quite a few times. So if we go back, prime shoulder trade just here. And I actually think I talk about this one in one of the examples. You can see a prime shoulder trade just in there. So if you start looking at extending into a level, we start to work up off that level. We don't know at this stage when it's just come up for the first time, whether it's going to hold, whether it's going to confirm, what it's going to do. Okay, but we're looking for that change in direction. When you get buyers starting to step up or sellers starting to step down in price off a key resistance zone, you know that they're not waiting to get back to the level, okay, to sell or to buy. In this case, you know, if this is a buy, if you're waiting to sit on the bid and you're looking for a retest before you buy, you might be left on the sidelines. Okay, so once you start getting that higher low, you know that there's enough pressure that market can't get back down to that level. And you can see by different indicators that it's starting to run out of energy on the sell side. Okay, and we're starting to build that energy on the buy side. Okay, so we're starting to turn. More supply of buyers here. If you flip that, there's be more supply of sellers into a level from underneath. And we've got a change in that short-term direction. Okay, and if it continuations too, so you know that when we're trading shares, I look at a lot of stuff off the bigger picture. You get that daily correction potentially, and the weekly trend is up. This is just a pullback on the weekly, but on the daily, there's a bit more, a bit more detail in it. And again, I'm looking for the same type of thing. If you can get that higher low coming to play, we know that buyers are starting to step in. They're eager to get in, and they want to be in for that run high, and they're not willing to wait as long. This is a perfect example on the DAX. We won't worry about this shoulder on the this is just on the open, but it's more, we've had a press down, buyers have started to lift it. This level here, once you start retesting and you fail, so then RTF up here, and we can't get back up to the opening highs, there's a chance we're going to look for this secondary move down, okay? And if you match off from that high to low, it's probably matches in from that high to the low when it started to find out, run out of selling pressure. But what you get is a lot of buyers building up here. It's a bit of a grind. We start to get that retest fail, that first press down, okay? You don't know whether we're just going to bounce straight back or not. But once you get it starting to stall at the MAs are rolling over. We've got momentum, you can see quite clearly down. We're holding stochastics. It would be nicer if it was at this stage, the stochastics were higher, but it doesn't really matter. As long as it's sort of around the 50 or below, around the 50 mark or higher is prime. But it's more based around that secondary move. So we're looking for that first move down. The first pullback it's met with some more selling, because anyone that's built it up here, they may have got back to a break-even trade, or once it starts to stall below, it's retesting that level and it starts to stall below the MAs or at the MAs. Anyone that was held through this, held a long position through this pullback, is probably going to start getting a bit edgy. And that's where you get that acceleration in the secondary move. Okay, and that's what we're looking for, that acceleration down, which played out beautifully. Okay, but remember, the market up here, it's running out of momentum. It's starting to pause, momentum's fading. We still got that stochastics keep getting pressured up, but it's not going anywhere. It's finding a resistance zone. It gets sold off quite hard. Stochastics start pressuring up, so buyers give it a bit of a nudge, but it can't really get anywhere. Okay, so this is just that shoulder we were talking about before. And again, you can look at stochastics. They come into that oversold territory, so sellers were pressuring it lower, wasn't going anywhere. So it wasn't coming back down to, last time it was oversold, it was down at this support zone around 45. Yeah, 4,000, 4,500? 45,000. It was down here, okay, the support. Next time it gets oversold, it's not down there. It can't get down there because buyers are holding it up, okay? And you can see the momentum starting to fade on the pressure down. So basically, you just box up that risk, take the break at the top side, risk below, and see where it goes. And you're looking to go from the bid zone to the offer zone, potentially. This actually went straight through. So, but either way, if you're trading that sort of risk, you're looking at 4 or 5 to 1. So it's a lot easier getting off that type of scenario, good risk reward. RTF with trend is just a retest fail. You're going with trend. Increase of buyers or sellers. You've got your pullback. It's an extra bow. It's just a better setup. If you're looking for this initial pullback, you got the press down, pullback. Yeah, you can sell that, but you're gonna have to take a different type of entry, and it's not as high probability as I think the RTF is. Once you see an RTF with trend, it's a cracker. I think you've got to be either short or long, depending on, short in this scenario and long in this scenario once you get that RTF, retest fail, and it starts to go, especially when it's with trend. Okay, so if we go on to, this is a FTSE, you've got this leg down. This is all part of one big leg, the first correction, and you're looking for that secondary leg down. So we started there, we pressured down, we popped up, sucker into a few buyers that think it's going to roll. You get their retest fail, you should be short. It's as simple as that. You get that, you could go short in this initial push down. Didn't really go anywhere. If your risk is above, you might have worn a bit of heat at the start, but once you get that retest fail and it starts to fail, you can get in a bit earlier. You can take a bit more risk on. So I think it's a high probability setup when it's with trend as well. So you want to be, trend is down, you get a retest fail on a pullback, you want to be going short. Before I go, you look at the stochastics too. Okay, so if you're buying when the stochastics are sort of in that overbought territory and your momentum's down, do you really want to do that? Okay, and so if you're buying up here, I think it's a very, very low probability setup on the upside. When you're against that, you're getting that change in momentum. You've got this RTF up the top here, and then you've got this retest fail when the trend's starting to go down on the first pullback. There's a lot that's going to be against you. So if you bought it here, you sat through this and it come back up here and you didn't get out, and you're going to take a bit of a hit on it, or you're not looking at the signs or what the market is showing you. Okay, this is a Seng. I don't know if I think I actually traded this one and maybe a bit earlier. This is just another example of retest fails. Okay, so you got the market pressed down, popped up, took out the low, retested from underneath, fails there, you got to get short. Okay, failure there, you got to get short because you're with trend. You can see momentum is down. You get this bit of a pullback in momentum. It backs to the zero line, which is quite handy, especially when you've got stochastics going from oversold to overbought. You know that the buyers use up a hell of a lot of pressure to get market back up to nowhere near the highs. Okay, so they're giving it a good push, but they can't beat the selling pressure. They can't outweigh that selling pressure, which is still there. And as soon as you got this minor RTF in here, you take the break. Okay, you can box up your risk. You know exactly where it is. I break that low, I'm in, risk is above. If I get in, it starts to retrace and go back up to my risk and takes me out, then so be it. It's just completely wrong, okay? And there's something else at play. This RTF here, even though it was an RTF, you've got to take note of how late into the trend we are. Okay, so here is more of the known than the unknown, but it's a good correction lower. And so you're going to get all the buyers trying to pick a bottom off. I don't see any entry of why you should be picking the bottom there. It pulls back, and then anyone there's enough buying juice in here, and potential people that have bought it through here that are holding, and then once you start to go, you can still squeeze out quite a bit of fuel and pressure down. But once you start getting a bit late into that trend, these little minor RTFs, when momentum's starting to lift, so here we're starting to lift, and looks like it's potentially lifting. Yeah, it paid out, potentially, but I think you're getting a bit late here, unlike the first few moves, okay, the first few RTFs. Is this making sense, guys? Is it going okay? So what I'll go over now is the couple of moves that I was talking about. Okay, so we've got through it quite a bit. A lot of it you've probably heard me preach on before and talked about before, but I think it's worthwhile hearing again. For me, I don't mind talking about it over and over and over again because it helps me cement it in my mind as well. So what I want to talk about with Bitcoin, and the way I'm going to talk through it is, from a perspective of we're trying to work out the trade, which way we're trying to work out is going to be a buy or a sell. Okay, and we're looking at the key indicators, the MACD, the momentum, stochastics, price action, EMAs, but into key levels. Okay, so you can see with this first part, the information that we've got so far, we've marked this up as a key level, okay, a key support level. And this is back on one of the slides previously. I think it was coming into a key support level. Okay, we don't know if it's going to go straight through because we're not, at that stage, we're not confirmed that it's going to hold yet. Okay, what we are confirmed is the trend is down. So you could go short in here. So we're looking at this RIS. So this is exactly what we've got. We've got no position, but what we're looking at, should I sell? Because the trend is down, we're below the EMAs, that's all good, but we know we're into a key level and we've had a bit of a flush into that key level. We have bounced, and what we've got another push into that level and we've rejected it. So at that candle there, to go short, look, it could work out for you, it may not. But what I'm seeing is that momentum is heading down, but momentum's more running out of steam than anything else. we're sort of in the momentum's on the downside, if that makes sense. It's below zero. Okay, so momentum's well and truly. So by that, if you can look at that purely when it's on the zero, below zero, and sort of well, if it's the more, the lower below zero it is, the more of the, if you're selling on a trend down, the more of the known market you're in. You're not in the unknown anymore because momentum's down. It's been down for a while. The market knows, and that, that sort of scenario. And you're also, the market's stretched on the downside with stochastics. So you used up quite a bit of selling pressure. It is hovering around that sells level. It could go through, but I don't see that as a high probability setup. Okay, we go to the next slide. So just by that basis, yeah, I wouldn't be buying just yet, but would I sell? Potentially not. And I know what's going to happen, so it's easy for me to say that. Should I buy? Okay, we just started to break this lower high. Okay, maybe I should be buying this high low. Where's my risk going to be in that scenario? It's going to be all the way down here because we've tested through that level. We haven't broken up and through. The EMAs are still down. So do you want to buy that either? We've got to break that lower high. We've got the rejection candle. Yeah, I should be all in. No, I don't potentially think so. We're starting to get things looking a bit better, but we haven't broken that downtrend. This could be a bit of a fake. Could be trapping some buys and then squeezing on them. We don't know that yet, but I don't see that as a high probability setup just yet. I ideally want to break the downtrend, and I want my first pullback. That's what I'm looking for. Okay, as it played out, where's your risk going to be? If you bought on that little break there of the high low, I don't like that. I haven't got. I bought that break of this lower high. I haven't got a higher low to work off. Okay, so I don't know where my risk is going to be. And as it played out, the market's heading back down and sort of testing back into that area. And if you're bought there and you're holding it, who's to say that's not going to roll over and you get poleaxed? Okay, and it goes down to 43, 42, 41. Okay, where is your risk? It has to be below this level, and that to me is way too much risk to take on that kind of an entry. Okay, into a key level. Okay, now things are looking a bit better. What we've got is this downtrend broken, starting to break up. It's quite clear now. It's getting a lot clearer. You've got 1, 2, 3 tests, and you've got a high low in play. Okay, so you know that this level is getting a bit more active. There's more buyers off that level. It's starting to confirm a bit more. So what you've got is things working in your favor. You've got the momentum starting to pressure higher. Stochastic's not quite there. It's a bit overbought, so that might keep you out there. It's a bit you don't really want to FOMO buy that, and that goes into that first trade the first chart. The squiggly line buying the highs, selling the lows. If you bought the highs here, there's no reason why it can't come crashing down. But we are a lot closer to a setup than we were previously. Now, when we get to this kind of scenario, okay, we haven't confirmed just there, but you've got something to work off. Okay, you've got this action here. It's coming off that level. This is your first pullback to the MAs after we break out of this downtrend. So we know here, look, if it holds this zone through here, which you could easily do, it could go a bit lower, but what ideally you're doing here is boxing up your risk. You know exactly where your risk is. So a break of that high means I want to be long. As long as that low holds, and a break out of the bottom side of that box means I'm stopped out, or I don't enter just yet. Okay, so when it breaks out to the bottom side and we haven't got an entry yet, then you just keep watching. It's as simple as that. But if you start to hold up that level and you start to go to the top side, you want to take the break of that top side of that box, then you enter in and you know exactly where your risk is going to be. And it's from there, it's a matter of managing your risk. And you can see it, look, it played out really, really well. This is the one that I was mentioning before, that high low. It played out beautifully. Okay, you got potentially a 4-to-1, maybe 5-to-1 into that offer zone. And if you held it, because there's really no reason to close it out just yet. If you took some risk off into that zone, great, then you can manage your risk on the second trade. Okay, but you can see by walking through this scenario into a low, we can step through of why we would enter, why we wouldn't enter, where the risk is. Is there risk that we can define? When we initially got that breakout, there was no risk levels to define. Yeah, if you had your risk below here, it's worked out, but I don't think that's a very good level, because if we didn't get this flush here, and then we got that break, there could be a flush at that level, you get stopped out, and then bang, up we go. Okay, so that's the first one. What I'll go through is an actual trade that I did do on the Hang Seng. I think it was somewhere around here. It might have been a bit earlier that I logged on and started watching it. Yeah, I think it was in this bounce. I didn't trade this. I was starting to watch this bounce somewhere in here. I was looking for a lower high a bit earlier than that. It didn't play out. So we've got the open. That was the open at 12.15, and the market headed down. Didn't really look back. I think you'd be struggling to find a decent short setup there, because don't forget, you're more in the known by then. Market's pressured down. It consolidated a bit here. Yeah, it did go on, but I don't technically like to trade that because it's oversold. Stochastics, you're running out of selling pressure. Well, supposedly, momentum's well below zero, not well below zero. Yeah, it can kick on, but I don't think it's a high probability setup, so I'm happy to stay away from that. What I'd be looking for, though, is an opportunity to get potentially get long. Now, there was an opportunity just in here to get long and look for the bounce. You've got the MACD starting to rise, so momentum starting to rise, stochastic starting to rise, but you are against the predominant trends. You've got to be really careful when you're trading that. And you don't know if it starts to pop up, test in here, and it rolls again. You don't know what's going to happen. So I don't see that as a high probability setup on the upside. You've got this kind of retest fail down here. So if you're going to trade that, you're probably better off trading in here on this break. If everyone can see what I'm talking about. Not this first green candle, because that green candle flushed. It was a bit of a trap, a bit of a pump fake of the low, and then it finished green. The very next trade, you can take it. We call it a higher high, HH2 or HH3. I think that's probably, correct me if I'm wrong, Nathan. But that's, you're breaking the high of this candle and the next candle, that red bar. You take out that high, you can potentially go long. Nice tight risk, because if it turns around and fades at this level, if it fades there instantly, you probably could be out pretty quickly. But if it goes through, there's a bit of a chance that you're at the start of a pullback, and you'd rather be at the start of a pullback against trend as early as possible. Okay, when the market's a lot more stretched than possible. By the time you get into here, you're around that 20 EMA, and look, there's a bit more risk in that. Doesn't mean that it can't do that, but there's going to be times when it pops up a bit and then rolls on you again, and that the bigger trend presses down. Okay, so again, not really looking at that. What I did, I come into the market somewhere around here, I was watching this. Okay, so we got this pressed all the way up to the open. We took out the open on this area in here, had a bit of a pullback, basically held the trend up, sat on the EMAs, and started to pop up. But what you've got to notice, when you have this leg up here, a good little pullback to here, a good expansion phase up, but then you come all the way back down to test back into that zone. It's not a really good sign if you're a bull or if you're holding long. Even though it does trade up through those highs, it's not the best of sign. You want a strong trend shouldn't pull back that deep. Okay, I'm talking about this leg. So this is all one leg, but this is a leg up, a pullback, another leg up. So this leg up here basically gave up all the gains from that leg. You don't really want to see that. You want to see a shallower pullback. You might chop around at a higher level, consolidate, and then you go again. That's a stronger trend. That's showing some weakness, some initial weakness, even though there was no setup to go short, and it did pop up through that high. Okay, so at that stage, I'm not keen on going long through that break. I'm really not keen on going short yet. I've got MACDs hovering around sort of that area where I want. The momentum's potentially starting to fade on the upside. Stochastics are getting a bit overbought up here. We're just going to wait and see what happens. So here, when we pull back, I was watching this thinking, okay, we could pull back here. There could be a long opportunity off this support if this is going to hold. But I wouldn't take the break because I think we are late into that trend. Okay, so for me, taking a long in here, not a high risk reward, I wouldn't suspect. I think it's more, 2 to 1 and risk. Risk is 2 and your reward is 1. That's not sort of the kind of trade you want to be taking. And that's purely because of what I was just explaining on this kind of a pullback. You've got this press through the high. It got through the high in the first candle, then stalled, had a minor pullback, and then went again. Okay, so yeah, this might be bullish to you, but it's not so bullish to me when we've retraced all of this move down. So initial thrust down, we've retraced all of that move. Okay, so to me, I'm looking at this going, I don't think we're going to be in a trend day, because a trend day really shouldn't have seen this initial thrust down. And I don't think with the MACD, we're starting to show some divergence, which the Hang Seng shows quite a bit, divergence in momentum. Okay, momentum starting to roll, but we're getting a higher high. Okay, that's not a good sign for the bulls. So that's what kept me away from buying it here. Okay, and look, it could have kept going, but regards to what I'm looking for, I'm not interested in that. And we got stochastic sort of in that overbought territory. It's coming out of overbought, but I'm not particularly interested in the long side there. So what we got here is the market grinding up. Now, when we're grinding up, and we're below that level, I'm taking a lot more notice that we could fade. Now, if we grind up here, if this breaks out here and takes out a high, I still don't want to be long, and I've just got to be a bit frustrated with the day because it's grinding up, it's making new highs, but I don't see it as a buying opportunity because of this price action. I'm seeing it potentially more of a range. So I'm interested in this, not for a buying opportunity to break out of that level there, which a lot of people would be looking at, purely because we're overbought. Last time we overbought, we're at this level. We're overbought at a lower level. Okay, so I don't really like that for a buying opportunity. I think it's got very limited push to the upside. Okay, but I see a lot more risk to the downside. So at this stage here, I don't want to go long, even though the MACD, EMAs are up. We're bouncing off the EMAs. I think that momentum's fading enough where if we get a lower high in here, I think there's more opportunity because we've got a lot of longs that are stacked up. And that's pretty much exactly what happened. We started to break down. We held that level. That's a confirmed lower high, inside lower high, below this high. And then once you start to confirm something like that, I'm happy just to go long. And that's an initial scalp. I've got to keep the mentality because I'm still against the EMAs. But I'm seeing that as a bit of a breakdown. If I'm right, that should have a bit of oomph to it. Okay? Because we got MACD's down or the momentum's down. We're coming off that overbought territory and we're starting to fade. And we know that there's a lot of buyers up here that have been loading up from off this low, loading. They're going to have to turn around and run for cover. All right, my risk is above. Now, if I enter on the break of this candle and it turns around and gets me in and straight back out, okay, I'm wrong. That's not a lower high. That's something else, and I have to readjust my price action. As you can see, it played out okay. I didn't like this, and that's the reason why I took it off pretty quickly. And I knew that we were early into a potential rollover. If it's going to play out, we're going to still get some fight back from the bulls because this, to me, is the anchor to the uptrend. And this is your secondary move. So what I'll be looking at entering here on the break of that low is that if we get a second move and it doesn't come all the way down to the pretty much in one foul swoop down to that support zone, it could still have a bit, a bit more residual strength into it. Okay, and that's what I was looking for. Close that out. Back on the sidelines, took a few points out of it. I think it was 15 points. I didn't bother taking a partial. It was just all out. Okay, so I'm still conscious that the MAs are still up. They're rolling. Everything's looking good to me, but I'm now down in that oversold territory. You can hover. I'm at oversold at a slightly lower level, which is great. But last time we were oversold, we're down into support. So I'm sort of looking at weighing up whether there's still some more strength or not. Okay, as it played out, we got that lower high in the shoulder trade. Okay, so that was a cracker. So basically, I got out. I was watching it for a few more candles, and then I'm back in again. As soon as we got that shoulder start to play out on the below the 20 EMA, at the 50 EMA, I think there could be a lot more weakness into that. And it played out quite nicely. It came into that support zone. And then again, if it was going to break that, it should have gone straight through, or it should have maybe popped up and gone straight again. But by the time I took a partial into there, once we got this green candle here, I'm out. So I'm sort of anticipating that's going to hold. I can always re-enter short if it starts to play out. But by then, I'd had a couple of good trades. I was happy. We're getting late in the session, that early morning session, and we're getting sort of an oversold territory. And on the MACD too, we're getting that push. We're on the wrong side potentially. So if it's starting to show some strength here, there's a chance that the momentum's going to start to swing around that level or at that level. Okay, swing back up again, which it eventually just keeps grinding down. But that's the trade. That's what I was happy for. Okay, so does that all make sense there? I hope there's a few good key points in there. That's basically the setup. That's basically the webinar that I presented. And this is the final page. So as a note, go and look at td365.com, and you might be happily surprised with all the new margin requirements that are happening. Email me, and I'll give you. I can get a link for you for the offers if you're interested in looking at that. But anyway, that's it. Is there anything that you had a couple of questions on? If there isn't, just let me know. You can always email me through any questions you may have. Support at tradesetup.com.au. Otherwise, that was the presentation. We've got a few minutes left. I probably won't go through any shares for now. The market's look, it's up 44, so it's actually not doing too bad. We're getting some support off that zone. We'll just go back. We'll make this, oops, daily 30. Let's get back to my 30. Where am I? 30 range, best fit. Okay, you can see that we're bouncing off this support again. I don't think the market wants it to go through there just yet until we get something down in the US, because we could start to break down and the US just goes up to new highs. People are not willing to give up, bigger positions at the moment. So yeah, I don't mind. We might chop around here. We might come back up and trade up to the top side of the range at 68.40, which is roughly 100 points from here, 80, 90 points from here. So we'll see how that goes. Yeah, I'll probably call it quits there, guys. If you have any more questions, I want to see FMG's hovering around the 19 mark. No worries, Pete. That's good to hear. And like I said, if you like what you hear, it'd be great if you can give us a bit of a thumbs up and help us spread the word. Leave us a like. Leave me a like. I always get happy when I count my likes. Yeah, but there's more than enough, and if you help us spread, there's more than enough educational material for anyone that's listening to this that hasn't gone through any of the trade setup stuff. Just jump on the YouTube channel. All right, guys, I'll call it a day there. Thanks for joining me. So next week we'll just get back into the usual, looking at the overall markets. I thought it was worthwhile just going through that while I had it fresh in my mind. Thank you very much, and we'll speak to you again soon. Enjoy your day.